Hi there, I'm Holly and you're watching 𝐊𝐶𝐞 TV live from Sydney. This is the Mid-Market Pulse. Apart from the trending market updates, I also have a special report on the 10 hot ASX blue chip companies. Well, without further delay, let's get started with the mid-market commentary for today and see how the ASX 200 traded by lunchtime. The Australian share market traded slightly higher in a seesaw trade on Friday, led by gains in healthcare, industrials and consumer staples stocks. The sharp selling across materials and tech space restricted market gains. The S&P ASX 200 is trading 5.20 points higher to 7,265.30 by the afternoon. The index has gained 1.20% over the last 5 sessions and is currently 0.23% of its 52-week high. Earlier today, the index opened lower after the major US stock indices closed on a subdued note. The fall in commodity prices also weighed on market sentiment. On the sectoral front, 7 of 11 sectors are trading in green. Healthcare is the best performing sector with 1.2% gain. Some of the other sectors that are trading higher include utilities, financials, consumer staples, energy and industrials. Bucking the trend, materials was the worst performing sector with over 2% loss. REIT, information technology, telecommunications services were among the top laggards. The ASX-listed mining stocks were under stress today, owing to weak commodity prices. Shares of the Australian mining sub-index AXMM shed up to 2.5% post its biggest intraday loss since the 19th of May. Heavyweight miners Rio Tinto, BHP Group Limited and Fortescue Metals Group Limited were all down over 2%. In a similar trend, shares of gold stocks AXGD declined as much as 3.8%, eyeing their biggest intraday percentage loss since the 28th of April, tracking a fall in bullion prices. Sector heavyweight Newcrest Mining Limited declined as much as 3.1%, its lowest since the 27th of May. Silver Lake Resources Limited as well plummeted as much as 7.7%, and West African Resources Limited plummeted as much as 7.8%. Well, on that note, let's have a look at the segment which everyone is waiting for, the top 5 gainers and losers. Gold minus Silver Lake Resources is the top percentage loser on the ASX, falling 8.5% to $1.72. Some of the other worst performers include Ramelius Resources, Perseus Mining, Resolute Mining, and Appen, which decline in a range of 6 to 8%. Automobile parts manufacturer ARB Corporation is the top gainer on the ASX, surging 4.9% to $44.43. Some of the other notable gainers are Reliance Worldwide Corporation, Bendigo and Adelaide Bank, Challenger and AUB Group, which rose between 3 and 5%. And now, before I share some trending updates on the ASX listed stocks, it's time for a short break. Stay tuned with 𝐊𝐶𝐞 TV and I'll be back in just a moment.
Property by 𝐊𝐶𝐞. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐶𝐞 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐶𝐞.
Hi and welcome back. I'm Holly and you're watching 𝐾𝐿 TV live from Sydney. This is the Mid-Market Pulse. Well, let's focus on the shares that are in the news today. Shares of DroneShield Limited rallied as much as 12.2% to 18.5 cents, their biggest intraday percentage gain since the 13th of April, on securing a new order. The drone security tech provider has grabbed a 2-year contract worth $3.8 million with the military of a key Five Eyes country. The company stated that around $2 million of total cash receipts under contract is scheduled for June and September 2021 quarters. The share price of lithium and boron explorer Ioneer Limited fell as much as 19% to 30.7 cents as its proposed US plant faces green hurdle. The company in an exchange filing said that the progress of the company's proposed rhyolite Ridge lithium mine in the US is likely to be affected due to an environmental decision. And Annex Metals Limited shared on Friday that it has entered into a binding royalty agreement with Anglo American Marketing Limited, a subsidiary of Anglo American plc, for the development of the Wim Creek project. The agreement provides for an immediate payment to ANX of $2.6 million in consideration of a 1% net smelter return from Annex production from the Wim Creek joint venture. Following the announcement, the stock of Annex Metals Limited is trading 2% lower at 9.8 cents. And financial research firm Citi has upgraded steel producer BlueScope Steel Limited to buy from neutral and has hiked the price target to $25 from $22 as per the Refinitiv data. The brokerage stated BSL is building cash fast and can improve earnings through its North Star expansion, benefiting from spot steel prices surging to record highs. Boosted by rating upgrade, BlueScope Steel Limited shares rose 1.56% to $22.14 Australian. And Noxopharm Limited announced that Novartis experimental drug 177 lutetium PSMA 617 is all set to become an important new treatment for the late-stage prostate cancer on the basis of Phase 3 clinical trial data released overnight by the company. The company has stated that now it has this chance to help grow the market for the drug and potentially radiogland therapy more broadly. As per the ASX release, the data is being presented to the annual conference of the American Society of Clinical Oncology, or ASCO, the foremost cancer conference in the world. Riding high on the announcement, the Noxopharm Limited stock climbs 2.14% to 71.5 cents. And Xeralto Limited announced on Friday that it has acquired Establishment Software Group Pty Limited, Xeralto's long-term licensing and collaborative partner. The merged entity trading under Xeralto Limited will utilize the software and integration framework developed by Establishment, coupled with its own payments technology in order to improve business efficiency while providing access to increased payment options so they can get paid quicker and better the management of their cash flow.